What's happening, y'all? Sunday swing trade setup. Just like every week, we're gonna go over the Sunday swing trade setup that I gave last week. We're gonna see how that was. I actually didn't do that swing trade, so we're gonna review it together. I didn't do the one I did last week, but I will show you the one that I actually did. So we're gonna review the swing trade setup that I did last week. We're gonna review the swing trade that I actually did. And last but not least, of course, just like always, I'm gonna fill out the market and give you a swing trade that I'm gonna do next week and some prospects, something to look at for homework education or something that you can either do later on in the week or as soon as the week start, right? So let's jump right into it. We're gonna pull up the swing trade setup from last week. See what I was talking about last week. Handle, right? So let me get these smiley faces up out of here, making my chart look ugly. All right, so last week, I was. So I'm gonna move the smiley faces. We're gonna look at the 4-hour time frame and see if the 4-hour time frame confirms. But first, right, let me pull up the hammer candle. Look like the hammer candle was right below the 200 move. Just for education. All right, so we're gonna pull that up on the chart and we're gonna see what HCA did last week. Let's see. All right, HCA. So no, if you took that trade from Swing Trade Sunday last week, would not have been profitable. If you look, let me go back to the chart. And this is why risk management is so important, because you see most of my swing trade setups I hit, but as you can see this time around, if I would have did that trade, I would not have been successful. So this is where I called that swing trade was right here. And the stock continued to go down for the rest of the week. Honestly, it's not looking like too bad. It's not looking like a too bad swing trade setup now. Honestly. So that'll actually let me look at it from another time frame, but HCA looked like it might not be a bad option for next week. 4 hour, 1 hour. I'm not really willing to bet money on it, but HCA looked like it might be a good prospect for next week. So HCA would not have been a good swing trade, but I got a good one this week. First we gonna go over the market, and then I'm gonna go over, you know what I'm saying, some prospects before I get into the swing trade that I'm actually gonna put in play tomorrow, right? And then next week I'm gonna actually show profits and losses of that swing trade, so you can see. So first we're gonna go with the fear and greed index, just like every week. We got to see how people are feeling about the market. So, looking at the fear and greed index, the fear and greed index shows that we are greedy, right? No need to be fearful. You want to trade with the trend, right? You want to trade with the trend. The market is greedy. Now, of course, when you swing trade, you prefer for the market to be fearful. But if it's greedy, go with the greed until it gets to extreme greed. You don't want to fight the trend either. So the market is greedy. This is also Q4, and people are spending the most money in Q4. What I mean by Q4 is the fourth quarter of the year. You got Thanksgiving, Halloween, Christmas, New Year's. People are spending the most money in Q4. So look for Q4 is usually a good month for the stock market, right? You got Black Friday. The stock market usually go up after Black Friday. You got Amazon. Stock market usually go up after Prime Day. So Q4 and the Fear and Greed Index, you know what I mean? We don't have too much information, but maybe the stock market is going to go up. Let's look at the chart and let's see what's really going on. First, I'm going to pull up the VIX. I'm going to pull up the VIX before I pull up the chart. And if this is watching Sunday swing trade setup, The VIX is a volatility index. It is inverse from the stock market. So when the VIX is up, that means the stock market is going down. So on this day back here, where you see that the VIX did this big old peak on what's that, August 5th, the stock market went down a whole lot. You know what I'm saying? So let me just confirm that. So August 5th, we're gonna go to VTI. We're gonna go to VTI and show what happened on August 5th with VTI. And that's the total stock market. So August 5th. All right, let me make sure y'all can see this. All right, so we go back to August 5th. You see that big old spike in the VIX, right? So you go back to August 5th, this is the total stock market. August 5th was right here. That was a big green day. The stock market did a big old drop in pre-market, and it was a big day. And literally, if you had a trade for 6 months, a 4 month trade, even a 3 month trade, you would have been going up. It would have been consistently profitable over a long period of time. But if you notice, when the VIX spikes, that means the stock dropped a lot. You know what I'm saying? So it's inverse. So you want to take a look at the VIX, at least on a daily basis, i- if not on a daily basis, at least a weekly basis. So that way you can kind of determine just like an inverse, like the VIX is basically the opposite of the what the market is doing. So if we're looking at the VIX look like it's creeping up, right? So if the VIX is creeping up, that don't mean the VIX can't go back down or nothing like that. But going off of the VIX looks like it's indicating that the stock market at least is trending downwards or has been trending downwards. Makes sense. So let's go to VTI. Let's look at the total stock market and let's verify and see if the VIX is right about what it's talking about. All right, so the total stock market has been going up. Look like it been going up for the past couple of days. Um, so if you don't know what this black line here is, I drew a trend line. A lot of the time when I'm looking for a swing trade, I'm looking for a third touch of the trend line. So that trend line, I just keep there to see if the total stock market will ever come back down to that line. And if it has like a hammer candle touching that line, then it's giving me a good confirmation of, you know what I'm saying, going up. But being that it's Q4, based on the VIX and all of that, I got the feeling, according to VTI on a daily, we're above the 20-day moving average. We're trending upward. The stochastic oscillator, which is this one down here, the blue is higher than the green. I mean, higher than the orange. This one right here that I just made bigger and smaller. It's above the orange. And if you notice, you go back, when the blue line goes above the orange, it's an uptrend. You see, you go back here, the blue line crossed above the orange one, and the stock started going up. Then, when the blue line crossed back below, the stocks started going down right over here. So, according to the stochastic, according to the trend, according to the 20-day moving average, and the RSI, it looks like the stock market is going to continue that uptrend. So, based on the total stock market and all that, it looks like we're going to continue the uptrend, which the fear and greed index didn't really confirm that, but the VIX might be looking like it's about to go back down a little bit as it was going up. VTI is showing the total stock market index. So let me go to, let me make sure y'all can see what I see. All right, so now I'm gonna go back to the swing trade that I did last week. Then I'm gonna give y'all a couple prospects before giving you the ultimate swing trade for next week. Right. So the swing trade I did last week was Celsius. right? And I'm gonna explain why I did this swing trade. So I just happened to be looking. I think I asked ChatGPT about a stock. Let me make sure. Okay, so I think I asked ChatGPT about a stock where, which stock has, been beaten down and taken a loss a lot lately, and it said Celsius. So I took a look at it and I was like, you know what? Let me trade it. So I got in the trade here on this hammer candle right here, and I got out the next day. So I could have got more profit if I held a little longer. It looked like it still might go up a little bit, but let me tell you why I took this swing trade. So if you're looking at the daily chart, right? I got in this trade right after this big green candle. And what that green candle is, it's a bullish engulfing, right? So let me pull up bullish engulfing so y'all can see what the bullish engulfing is. And the bullish engulfing is basically a candlestick pattern where you have a green candle that is larger than, hold on, let me pull it up. The bullish engulfing is where you have a candle that is larger than the red candle next to it. And it's really great when it's bigger than multiple candles, right? So if we go back to the chart, make sure y'all see what a bullish engulfing is. The whole body of the candle is bigger than the candle next to it, right? And is usually a great reversal candle, as you can see in these examples. Stock was coming down, and then you have a large candle larger than the last one. So what's that showing is this candle is a lot smaller. It's showing that selling pressure is the sellers are losing strength, right? Because you started with big candles and now the candle is smaller. So the sellers are losing strength and then buyers just outweigh sellers, you know what I'm saying, pushing the stock in a direction. You know what I'm saying? Nobody's interested in selling no more and buyers outweigh the buying pressure. So that's a bullish engulfing. And bullish engulfings, like I mentioned, are best traded. You could trade them anyway, but they're best traded at the bottom of a downtrend as a reversal candle, right? So we had the bullish engulfing. If you could see right here where this line is, let me make sure y'all can see. Let me go back to trade view. So I really should have stayed in this trade a little bit longer, but I got in on this day right here. Let me go back to the chart. So I got in on this day right here and I held to the next day. I got out too soon. I could have made more profit, but I was profitable on my swing trade last week. So we had the bullish engulfing candle. We had a bullish engulfing candle that that you know what I'm saying, that was at the bottom of a downtrend. So as far as candlestick patterns, that was a good go. Then we crossed above the next day, the day that I entered, we crossed above this moving average right here, which is this orange line right here. So it crossed above the moving average, gave me additional confirmation. But then on top of that, my normal smooth MACD had already changed to green. So I was expecting green action from the green response on the indicator. Also, the RSI crossed above the middle line of the Bollinger Band down here, and the blue line on the stochastic is still above the orange line. So that's why I got into Celsius last week. So now I'm gonna go into some possible potential trades before I go into the one that I really like the most, right? So let me take a look at Carvana. So Carvana, I mean, it's been going up. It's been going up a lot. I usually like to, let me make sure y'all can still see that. I usually like to catch swing trades on a downturn, right? But Carvana is trending up hard. Also, the RSI looks like it's about to cross above the middle line here. The stochastic, you got the blue line above the orange line. So because of the trend and because of the indicators, I think Carvana is a potential good swing trade. But I'm not actually gonna put money into that. Oh, and by the way, when you swing trading, the most important time frame is the daily time frame. That's why this you see this next to the Carvana over to the left in the top left corner. You see the 1D. I'm looking at it on the one day time frame. But my best swing trades, I need it to line up on the daily time frame, the 4 hour, and the 1 hour. And if it line up on the monthly and weekly too, then that's even better. So Carvana was a prospect, but I'm not in love with that one. Let's take a look at my other one that I thought was all right, but I'm not in love with either. Home Depot. So I like Home Depot because Home Depot is giving me a bull flag and a cup and handle pattern, right? So let me see if I can make sure y'all see what I see. All right, so this is on a daily time frame. So I'm gonna pull up the bull flag and cup and handle so y'all can see. Um, y'all can see what I'm talking about. All right, so take a little quick snapshot view of that, and now let's look at the bull flag. All right, so the bull flag is basically an up something that's going on an uptrend and it consolidates. And a lot of time that consolidation period is going down on a downward trend. After it breaks the high of that consolidation, it is a confirmed bull flag and it usually runs for a little bit after that, right? So this is a bull flag. It's literally a flag pattern that continues to go up. It's like a continuation pattern. It goes up, creating a pole, forms a little consolidation, going in a downward trend a little bit, and then after it breaks the high of that flag area, it continues to go up. Right. So now let's go back. Um let's see if we really feel like Home Depot is doing a flag. So if we look at it, we got let me draw on this thing a little bit. So we got the flag pole right here. We got the flagpole right here. Now we got the flag, right? One more time. Now we got the flag, right? I'm making this all ugly. So we got the flagpole and we got the flag with this last green candle breaking the high of that flag, right? Because the high of the flag is right here. That's the high of the flag. It also looks like a previous resistance level. You know what I'm saying? Resistance once broken, look for a continuation, right? But if you look back over here, this candle right here and this candle has previously tested it as resistance, and now it has broken through resistance on a flag pattern. So that's why I like Home Depot as a possible continuation. The reason why I'm not in love with it for real though, is because of how high up it is on the Bollinger Band. Now, the Bollinger Band isn't, you know what I'm saying? It's not something to say, well, if it's at the top of the Bollinger Band, it can't continue. But as much as I like that bull flag pattern, oh, and let me also show y'all the cup and handle because it also gives me cup and handle vibes too. So bull flag, but also cup and handle, right? And these patterns, they're more than just patterns. Like they're also like, you know what I'm saying? There's psychology in these patterns. The reason why they're highly probable. You know what I'm saying? But the cup and handle is a nice U shape. It kind of like forms like a bull flag too. Like it's like a U shape that forms a bull flag, and then after hitting a level of support, it continues to go up. Now that support could be a moving average. It could be, you know what I'm saying, a point in the chart where it hit multiple times a long time ago. But it really is a great confirmation if it's hitting a line of support. So let's go to Home Depot. Let's see if Home Depot is actually hitting that line of support when it touches back to be like um, a confirmed cup and handle. So this is where the handle part. Let me make sure y'all can see what I see. So right here near the bull flag, if you can see where the handle part is, you can see that that is a good level of support, right? And support is an area, like I mentioned before, it's either a moving average, like these lines you see in the chart, or it's going to be a level where the stock hit multiple times, right? A level or a zone, right? So if you look at this support level that I just added down here, you see that it came down to here, it created a wick, and the wick is the thinner lines and on the candle, right? You got the body and the wick. The body is a thicker part. The wick is the thinner part of the candle. And you can see on previous occasions, we came to that same level and either bounced down or bounced up in this little area right here. So we got a bull flag, cup and handle at support, but also to go over the indicators. You know what I'm saying? The RSI is going up, the MACD is green going up, and the stochastic, the blue line crossed above it. Let me take a look at the 4 hour and see what that's saying. The 4 hour, see on the 4 hour, you can see the bull flag even better. On the 4 hour, though, it do look like it could be like near the end of the bull flag. So that's one reason why I'm not in love with this pattern. Now, what would really make this pattern great? Because on the 4 hour, I see a head and shoulder, right? So a head and shoulder, and I'm gonna show y'all that too. But this wouldn't be a confirmed head and shoulder until it breaks. I would want it to break this area right here to be a confirmed head and shoulder. But a head and shoulder pattern, now I'm gonna pull that up. Now see by looking at multiple time frames, you can see like, okay, I see other patterns, right? And the longer you looking at this, the longer you looking at it, you could be like, okay, I could, you'll be able to identify patterns like right off rip. So let me make sure y'all can see this. So this is looks like an inverse head and shoulders and a bull flag. So I'm gonna pull up now the inverse head and shoulders. So the head and shoulder and inverse head and shoulder is literally the same pattern, but the inverse head and shoulder is upside down, right? The head and shoulder is literally a head with two shoulders. You know what I'm saying? Basically, three triangles, but the middle one is higher than the other two. The other two should be near the same level. And once it breaks that neckline, it is a confirmed head and shoulders. And it's the same on the flip side. So if we go back to Home Depot on the 4 hour time frame, we broke that neckline already, really. We broke the neckline already, so we could be a little late on the head and shoulders. We could be a little late on the head and shoulders, according to the 4 hour. And on the 1 hour, we also got a bull flag. Let me make sure we on the same page. I'll be flipping through stuff. Yeah. Okay. So on the 1 hour, we also have a bull flag. All the indicators look like we going up. So I like Home Depot. I like Home Depot for next week. But it's not the best option. So I'm gonna give you one more before I go into the one that I'm actually gonna trade. Um, and I like Amazon. I like Amazon. So we're gonna start from the 1 minute, the 1 hour, and go from there. So I like Amazon. Let's go to so first on the 1 minute, on the 1 hour, my bad, you can see that it's like it's at a zone and it's not like moving, right? This purple line you see right here. Um, let me make sure I'm clear about so this purple line right here is the 200-day moving average, which is the longest day moving average. You have moving averages all the way down to like 9 day, but 200 is the longest, so it's the strongest level of support. So if you look right here, let me do this horizontal line. If you look right here, this little zone and area, the stock is struggling to get past that area, right? It don't want no smoke going down any further, right? That's on the 1 hour. So we have a nice form of consolidation, right? Um, we have a nice form of consolidation. And we got the normal smooth MACD. This one right here that I'm making larger and smaller is turning green. So let's go to the 4 hour. The 4 hour look like the normal smooth MACD is about to turn green. I would probably wait for the stochastic, the blue line on the stochastic to cross above, or the indicator to cross above this red moving average. So based on a 4 hour chart, I probably wouldn't enter Amazon until higher than 98.5 is when I would probably enter a swing trade on that. Now, if we go to the daily, one thing I did like about the daily chart was, let me move these. What I liked about the daily chart, which to me is the most important when it comes to a swing trade, is so we've had a brief correction, right? Amazon has came down the last couple of days, and that's when you want to buy. Some of the ones I was showing you earlier, you know what I'm saying? They kind of hit tops or whatever, but or they're close to the top. Amazon, the reason why I like this one is because it's been coming down. But what I also like about Amazon is I see a divergence, and a divergence is when the stock, hold on, let me move that. The divergence is when a stock makes either higher lows or higher highs, while the indicator makes higher lows or higher highs. So if we go right here, right, that's going up. It made a higher high, but the indicator made lower lows, right? And I'm gonna pull it up on the internet so y'all can see the little example. But the indicator is making lower lows while the stock price is making higher highs, right? Let me make this bigger so it could be an obvious higher low. So the indicator making higher lows, the stock is making lower lows, right? And I love divergences. So Amazon looked like it got a divergence. Let's look at the 4 hour chart. So the 4 hour chart, it looks like pretty soon our normal smooth MACD is gonna cross over to green. I like that. But on the 1 hour chart, it's already green. It's already green. And Amazon on the 1 minute chart, we're hovering right above that that 200-day moving average. And we got nice consolidation showing that the downward trend is easing, right? It's slowing up. So Amazon I think would be a good swing trade for next week. But without further ado, man, we're gonna get into the swing trade that I'm actually going to do next week, right? All right, so Google, and I'm gonna do Google for plenties of reasons, right? Let me clean this up so I could go over all of my explanations. All right, so Google looked the best to me out of everything. And the reason why I like Google, right? Google is at the bottom of the Bollinger Band. The Bollinger Band is an indicator where the stock trades within, right? So this top red line, let me make sure y'all can see what I'm saying. All right. So the top red line is the top of the Bollinger Band, and this green line at the bottom is the Bollinger Band, right? So we're at the bottom of the Bollinger Band. On top of that, the last 2 days, we got wicks touching the 200-day moving average. If, like I mentioned before, the 200-day moving average is a strong level of support, right? So let's go back in history and we're going to look at what happened the last two times the 200-day moving average was touched, right? So we go right here where the last day of the 200-day moving average was touched, the next 3 days was green. You could have held it for 4 days and it would have been straight profit, right? This was the last day that the 200-day moving average was touched, and the next 3 days, 4 days, the stock was up, right? So the 200-day moving average is a good level of support. The longer the wick that it has touching the 200-day is the better. However, if you look the day before Friday on Thursday, we had a long wick touching it and it still went down, which was probably a fake out. So I like the fact that we're at the bottom of the Bollinger Band and we're touching the 200-day moving average, right? But to go further, you know what I'm saying? And you always want to find something on a drop. You want to find something that, a valuable company that's very profitable, like Google, very profitable, that just had a nice correction. And Google has had a nice correction. So we got higher lows on the stock, lower lows. Hold on. Higher lows on the stock, lower lows on the indicator. Lower lows on the indicator. Lower lows on the indicator. So we got a nice divergence, bottom of the Bollinger Band, long wicks showing rejection. But I got another reason why I love it. I got another reason. Dang, what I did. My bad, y'all. All right, let me pull up Google. Come on, man. All right, so we got the divergence. We're at the bottom of the Bollinger Band. We're also at the bottom of the Bollinger Band on the RSI, right? Down here, as you can see. So the RSI is not oversold, but when you add the Bollinger Band on there, it gives it like hidden oversold levels, right? So now I'm gonna draw some trend lines. So a good entry for a stock would be the third touch of a trend line, right? The third touch of a trend line is the strongest level of support, right? So let me pull this back even further. make this where y'all can see it better. All right, let me do a redo. Trend line. No, that ain't it. Might be from right here. Try to finesse it from this angle. My bad, y'all. I think I found it on the 4 hour time frame. All right, so that's everything we need to look at on the daily time frame. Let's go to the 4 hour. So the 4 hour time frame, I'm gonna go ahead and draw the trend lines. So it ain't all that perfect. But as far as trend lines, it looks like Google is kind of riding the same trend, right? It's not a perfect trend line, but now on the 4 hour time frame, let's look at the stochastic oscillator. We're all the way down here at the bottom. The RSI, we're also very close to oversold. We're at like 34. Oversold is like 30. And our normal smooth MACD is about to cross, go into green. When we look on the 1 hour, the normal smooth MACD has already turned to green. We're right down here at the 30 mark, and the stochastic look like it's going to cross up. We also on the 1 hour have like a nice area of consolidation. Looks like the selling volume or pressure is going a lot lower. So if you wanted to trade on the 1 hour time frame, I would wait until the stock goes above this moving average right here, enter the trade right there, and go up. So we're gonna go to the daily time frame. Remember that we were right here at the 200-day moving average, right? Right here at the 200-day moving average. And oh, I think this was the trend line right here. All right, I found it, y'all. My bad. I'm thinking it was further back than what it was. So there is our trend line, right? Our trend line has 4 touches. And for a trend line, you want to at least see 3, right? So a trend line, you could extend it on out for future references. I'm going to also put a little support level right here because I'm seeing that it likes that level. Boom. So what you could do on this trade, right? What I'm gonna do on this trade, I'm probably just gonna hold it for a day or two, but you could hold the trade as long as it stays above this trend line. If it breaks this trend line, then you know what I'm saying, then you know to get out. You could also switch it to like the 4 hour, and if it breaks it on the 4 hour time frame or breaks it on the 1 hour time frame, then you get out of the trade there. But that's it, man. Listen, this is an easy swing trade. I'm gonna actually show the profits. I'm gonna swing trade Google tomorrow. I'm gonna show y'all the profits or losses on the swing trade. Don't let the market get your money, man. Use stop losses and a smaller time frame to manage your trade. I'm Mike, the Money Motivator, man. Y'all like and subscribe.